If you trade this simple trading strategy for the next 30 days, I assure you, I guarantee you that you will see profitability and consistency in the next 30 days. You will be able to pass your profit from challenges. It is ridiculously easy and it is mechanical. You do not need daily buys. You do not need anything. And I've made a lot of videos on this strategy. The problem with people is that they hop on from one strategy to another just because they go through one losing day. The thing with trading is no matter how good your strategy is, no matter what's the win rate of that strategy, you will have a losing day. Okay, this is trading. If you cannot accept this fact, then please leave this video right now and stop watching my videos and go find someone who flexes Lambos and then you go buy his course. Okay, I'm not gonna waste my time and also your time, because if you don't understand this entire strategy and if you don't implement it in the right way for the next 30 days, then it's not worth it. I'm wasting your time and you're wasting my time. So first thing first, guys, what you want to do is go here to your trading view and you want to set your trading view time zone to New York. Now, once you have that, the timings that I'm about to talk about in this video are going to be aligned with you as well. Now, we're going to be trading NQ for this strategy. You can use gold as well. Gold futures, okay? Now, there is this one candle that forms on the hourly time frame that is so significant, and that single candle is going to tell you each and everything about how you want to take a trade, okay? I'm going to go over from A to Z, explain you each and everything. So this is the 8 a.m. candle, okay? So as soon as this 8 a.m. hourly candle closes, what you want to do is mark out the low of that candle. Once you have marked out the low, the next step is that you mark out the high of that candle, okay? Now that is step number one. We mark out the low and the high of the 8 a.m. candle that just closed on the hourly time frame. Now look to the left side and mark out any swing lows and swing highs that are near the high and low that we marked out of this candle. So if I look to the left, we have the most recent low right here on the hourly, and we have the most recent high right above the 8 a.m. high. This is swing high, this is swing low, this is the 8 a.m. low, this is the 8 a.m. high. Now, what we have to look for is for price to either sweep out the 8 a.m. high, but also sweep out this swing high, okay? Or we are waiting for price to sweep out the 8 a.m. low and then also sweep out that swing low that we marked out, and then we can look for trades. But this is what you should do before 9 a.m. open, okay? So the actual market opens at 9:30, but the volume starts coming in at 8:30 a.m. New York time. So you can take these trades pre-market open, okay? So let's assume that price goes down and takes out the 8 a.m. low, okay? Once we've taken out the 8 a.m. low, we wait for price to sweep out the swing low that we marked. Once that happens, what you want to do is then drop down to 1 minute time frame. Now, once you're on the 1 minute time frame, you're looking for your entry confirmation. There are some extra confluences that you can use. For example, on the 1 minute time frame, you look for SMT divergence, which is not necessary, but it is optional. Of course, it helps. As the more confluences you have, the more the strike rate is going to be. But in simple terms, when we have swept the 8 a.m. low, we have swept the swing low, we are looking for a market structure shift, okay? And I want to draw out the 8 a.m. low and 8 a.m. high like this. So once we get a market structure shift, the second thing that you have to look for is make sure that price has closed above the 8 a.m. low that was swept. We need to see price come back above this level and close above this 8 a.m. low. Because if we get a market structure shift somewhere, let's say around here, right? And we still haven't closed above the 8 a.m. low that was swept, that is a risky setup. And price can keep just going down and continue going down, okay? So we need to see price closing back above the level, which would look something like this. And then we have a market structure shift. And then you can take your entry from the order block, or you can take your entry from the breaker block. Okay, so when price comes here, you initiate a long position and you can target as your first TP the 50% of the 8 a.m. candle. So you go here to the fib, you mark out the fib from the candle high to the candle low, and right here in the middle, you have the 0.5, right? So it's going to be somewhere around here. This is where you can look to take a partial or you can go break even. But your final target is going to be the opposing high that we marked out of the 8 a.m. candle. Okay? And similarly, guys, if we, let's suppose, take out the 8 a.m. high, we look for the same pattern. We wait for price to sweep out the high. We wait for price to sweep out the 8 a.m. high. Then we look for a market structure shift to the downside. Wait for price to close back below the 8 a.m. high. And then we take our entry. Partial at 0.5 level of the 8 a.m. candle, the 50%, the midpoint, or break even. And then you can hold the trade to the downside. I'm going to give you guys some examples, and that is going to clear out each and everything. So let's move on to the examples now. So this is example number 1, and we're going to look at the same pattern that I was explaining on, right? The same picture. So 8 a.m. low, 8 a.m. high, we got the swing high and the swing low. So let's drop down to 1 minute time frame. Now let's see what happens. Okay, price swept the 8 a.m. low, but we haven't swept the swing low that we marked out, so we are not looking for a trade at the moment. Price goes down and then takes out the swing low. So now we have to look for a market structure shift. Perfect. So now we have this fractal high that was broken, right? And we have also closed back above the 8 a.m. low that was swept. Check, right? Now we have this auto block, right? And pretty much what you can do is take your entry from the breaker block, which would be here, right? This would be your breaker, or you could take your entry from the retest of this auto block, right? And then you can target the opposing high. So we tap into it and bam, just like that. So if you took your entry around here, you would put your stop below the bodies of these candles, right? And you would go for 1 to 2 at least. So if the 8 a.m. high that you're targeting is not giving you 1 to 2 at least, you can go break even here or take another partial, right? And then you can hold till 1 to 2 risk reward ratio. Let's move on to the next example. All right, so here is example number 2. So let's mark out the 8 a.m. high and the 8 a.m. low, right? We are on the hourly time frame at the moment. Then look to the left and mark out the swing high, the most recent. And for the swing low, we don't have something except here, right? So we can mark that out as well. Now, let's drop down to 1 minute time frame. So let's see what happens next. Price consolidates, and notice what happened. We took out the 8 a.m. high. We also took out the 1 hour swing high that we marked out. So now we're looking for a market structure shift, right? So you could say this is a fractal break here, but I wouldn't consider it. I need some more confirmation. So either an IFVG here, IFVG pattern, we inverse this gap and close back below this, because every single time you're going to get different scenarios, right? So sometimes the market structure shift is going to be really clean, and sometimes you'll have to find a way to take a trade, right? So price would be something like this, and then it would reverse like this. So we have this fair value gap. So let's see what happens. Okay, cool. So we inverse below the fair value gap, but we still didn't close below the 8 a.m. high that was swept after the inversion. So we wait for one more candle, and that closed right here, right? This could have been your entry. So you would take a short position here, put your stop right above the inversion, right? And you would target the 8 a.m. low. Or you could have also placed your stop loss above this bigger IFVG, right? So we are also considering this fair value gap. So this would give you 1 to 3 risk reward. So let's see how this plays out. Bam, just like that, 1 to 3 secured. And if you had your stop right here, that would be 1 to 4. Let's move on to the next example. All right, guys, here is another example. And this one is a bit different because when I say mark out the swing high and swing low as your key levels, you can also mark out PD arrays like fair value gap or an auto block, right? So we have the 8 a.m. candle closing here. So let's mark out the high and the low of that candle. Now, if I go here to the left, you can see that we don't have any swing lows here. We have one over here, which is way far down, right? And it would just not be wise to wait for price to close back above the 8 a.m. high after it is swept. So we can use this auto block over here as our key level, okay? So above the 8 a.m. high, what we have is this unswept high, right? So we have the high and the auto block down there. So let's see what happened here. So if I drop down to 1 minute time frame, let's see what happens. So price goes down like that, and look what just happened. So we swept the 8 a.m. low, we tapped right into the auto block, right? We closed back above the 8 a.m. low that was swept, and we also did get an inversion set up right here. Cool. So now what you could have done is taken your entry here, put your stop right below the inversion, or to be safe, you could have put it here and then you could have gone for 1 to 2 risk to reward. So let's see if it hits it. It comes back, and in this case, you probably might have got closed at break even, right? Or you might have closed out at a 1 partial. But the key here, what I'm trying to explain is you're not going to get cleanest setups every single time, okay? So you have to, in some form, use some discretion, some logic into what is happening. So for example, this is the key level. We took out the 8 AM low. We tapped into the auto block. We got inversion, and bam, right there. Let's move on to the next example. All right, guys, so here is another example. So we have the 8 AM candle. Let's mark out the low, and let's mark out the high of this candle. Now look to the left side. We have a swing low on the hourly, right? And we have the swing high up here. So let's then drop down to 1 minute time frame and see what happens. So if I play this through, we took out the 8 AM low, and we are not taking a trade after it is swept, but we are taking a trade after we see some confirmation. So right here, if you can see, we did get inversion setup, but we still didn't close back above the 8 AM low that was swept, right? So now in this case, you would take your entry at the retest of the 8 AM low, put your stop right below the inversion level, and you would go for 1 to 2 risk to reward ratio. So let's see how this plays out. Bam, just like that, the full TP was hit. Absolutely beautiful trading strategy, guys. And then for the next 30 days, please trade with this strategy. And if you don't see results, then you can come here and comment down below. Oh, Faz, it doesn't work. You're wasting my time. Why the fuck would I waste your time, bro? There are some people who comment shit like this. Wow, you're wasting my time. I'm not going to watch this. Bro, don't watch it. I don't give a flying F, right? I'm here teaching you for absolutely free. So go and test it out. Trade it on your funded accounts. No financial advice, but go and trade it, okay? Subscribe for more. Subscribe right now. Thank you so much. Goodbye. Mwah.